Ladies and gentlemen, please welcome Mike Novogratz.
It's a lie to think of this love as anything but laughing at a choir boy. So what you gonna do now?
I put my notes down. Well, thank you. It's great to be back here. I spoke at the Consensus in New York 6 months ago, and it feels like about 4 years since then. Ether was trading about $90, I think, at the time, or at the beginning of the conference, and I think 130 at the end of the conference, on its way to the moon. And so a lot has happened. I want to start by, Joe Lubin was a college roommate of mine, and just telling everybody how proud I am to see what he's built, this great community, the great business he's built, and so it's just pretty cool to see one of your guys soar like that. And so, Joe, congrats. And I want to thank Amanda for putting this on and her whole team, because I've been asked to speak at a lot of conferences recently. Usually I speak to crowds that are just coming into the space or learning about the space, and so it's a pretty easy speech. I have to admit being intimidated here, because normally I know more than about 80% of the audience, and today I think I know more than about 20% of the audience. And so you're going to bear with me a little bit. My team made some slides for me, and then I realized, I've been doing this for 30-odd years, getting on stage, talking about markets, and I've never actually used slides. So I might just have them run in the background, because it'll completely throw me off. I wanted to talk today a little bit about, why I'm so excited about the space, a little bit about what I'm going to do about it, what I'm worried about, and then leave you with some predictions, because I spent my whole career as a speculator, and it would be really bad to be a market speculator and not give you guys some predictions. And so when I've been interviewing people, either on stage or personally, I ask what their aha moments have been that got them hooked into this space, because there seems to be people have an aha moment and then they go down the wormhole, and like the blockchain and the decentralized revolution becomes their life. I've had many, but one of my first ones was walking into Consensus in January of 2015, going over to ask Joe for some advice on my stale Bitcoin and VC portfolio. I said stale because if you remember, for about 2 years, the whole space went relatively flat, and I hadn't been paying much attention. And it was the aha moment I walked in and I saw, Joe leading this group of 25, 30 people in this Brooklyn warehouse, and they were literally plotting out a revolution. They had whiteboards with businesses that they were going to disrupt, and there was an energy that was infectious. I had no idea what to expect when I went over there. I thought it was going to be Joe and a dog, and I found this vibrant room. And what was most interesting to me was the confidence that both Joe and the whole team had. Andrew Keys had just started there, and there was not a doubt that they were going to change the way we think about business and we do business. And so I did what any speculator would do. I bought some ethers. They were trading about 90 cents at the time. And I went to India, to look at real estate and meditate. And I came back, and now ether's at 300, so that was kind of cool. As price went up, I hired a young guy. He's here somewhere in the audience. We got more involved. And when you start making money in things, you look in more and more and try to figure out what was going on. Macro guys try to take complicated things and make them simple, and it sometimes takes a long time for it really to become clear. I had another aha moment just last week. I was interviewing Alex Marcos. So Alex was a Wall Street whiz kid from MIT who left his company after having made a fortune and found himself addicted to the Bitcoin blockchain. He now works as one of the core developers and spends his time literally with 4 young guys and an ex-partner of his coding on the protocols of the Bitcoin blockchain. And I was like, Alex, that's so noble of you. Like, that's like your philanthropy. And he looked at me and was like, I own a lot of Bitcoin, and so I really want the system to be as good as it can be. And yeah, there's something a little bit noble about it, because I think I'm doing it for the right reason. But there's a self-interest in it as well. And it dawned on me then exactly why this is such a powerful tool, why these ecosystems are so powerful. that by doing good, you're actually pushing the price up in the right direction. And I started thinking of all the tokens that we participated in. We bought a token called Funfair, which was doing, a blockchain version of online gambling. I started thinking, well, I love the CEO, I like the business plan. It's an easy market to disrupt because when I log on and play against the Bahamas, they could be cheating me and I'll never know. And then I started thinking, wait a minute, as a token owner, I'm like an Amway salesman. I want other people to play, and I want other people to play. And so these tokens, these communities are really viral networks. I literally think of it as Amway. And you've got thousands and thousands and thousands of virtuous circles that go on every day. And so it started me to think, by doing good, you do good for the community. So here's another, I promise this will be my last aha moment. I have a sister who founded this group called the Acumen Fund, and she was really kind of at the forefront of what they call impact investing. Really saw capitalism as a tool that usually works but doesn't always work, and there were great places where capitalism was failing, and so you needed different business models. And she's invested 20 years looking at different ways to deliver goods to the 2 billion people at the bottom of the pyramid. And I heard her talking about this new business she had invested in, and it was a high-end chocolate business. And you looked at the value chain of who got paid for a $4 chocolate bar. And the women farmers in post-conflict Colombia at the top of a mountain in horrific conditions, who are living in poverty, who are picking these very precious beans that go into the chocolate bar, were making less than 1 penny of the $4 chocolate bar. And so this business model that she had invested in was going to pay them 200 to 300% more than they normally got paid. So still not a lot, but not 20% more, 200 to 300% more. And as she was telling this story and inspiring the crowd, I was like, this is where blockchain and social good can converge. And I was like yelling at my sister for being so slow to get into the blockchain system. She really appreciated that. And so, again, I was thinking, we have these unbelievably powerful tools. This group is creating these unbelievably powerful tools. At the last consensus, someone talked about, 40% of the clothing in this room probably has some slave labor in the supply chain, and how the blockchain could be used to track the supply chain. And it got me back to thinking, doing good for the community, doing good for business, doing good is a very powerful, self-enforcing motivator. But they're just tools. So at the core of these tools, you need moral leadership, you need kind of a righteousness. What I love about Joe and his company is from the very moment he started talking about it, it felt like they were in it for the right reason. They really see this as a revolution, and a revolution for good, not just for money. Which gets me to one of my worries. When everything's so exciting and there's so much buzz and rush, we all have the angel on our shoulder and we have the devil on our shoulder. And I can remember at Fortress, my old company, I had this giant hedge fund. Everyone liked us, and I had guys on my team that wanted to do really illiquid stuff in what was a liquid hedge fund. And so, we created what was called a side pocket and kind of bent the rules. We told our investors, they all agreed to it, and we bought all kinds of illiquid stuff. Well, I got an email yesterday from my old company with my 9-year-old portfolio of crap that we had bought. And it was just this unbelievable, memory of our unbelievable recognition of just, what a mistake we had made. I'm still looking at this badge of shame that comes every quarter to tell me, my illiquid stuff that they haven't sold for 9 years that was supposed to be in a liquid hedge fund. And it goes back to this idea of do the business you should do, not the business you can do. And right now, this community is in a world where there's this amazing tailwind. Everyone wants to be part of it. I mean, it's infectious. And so it's easy to let greed seep into the decisions you make. So I would ask each person to kind of rate that. It was a John Whitehead. He was the chairman of Goldman Sachs at one point, quote, do the business you should do, not the business you can do. We've been seeing all these young guys come in and pitching us these great either VC or hedge funds in the blockchain space. And I've been investing in some of them. And often I get very excited about the talent and the enthusiasm of these young guys and their insight, and they seem so much damn smarter than I do. And then I say, well, what's your fee structure? And they're like, well, we're 3 and 30, and then if we make over 30%, we go to 40. And I'm thinking to myself, oh my goodness. Right? These are moonshot bets, and so, to take 3 and 30, you're really taking 40% of the investor's potential profits. It just seems egregious to me at this point. And, I'm not telling people how to run their business, but I go back to that idea of doing what's good for the community will be good for you. We're launching a big hedge fund. We're going to do it 2 and 20. And I actually had some people called up and said, please don't do it. It's going to ruin the market. And I was thinking, no, it's going to help the market. Because if investors don't make money, right, it becomes the negative feedback loop. In the same way good stuff is the positive feedback loop, bad stuff is the negative feedback loop. And I do worry I'm seeing more and more of it. There's stock promoters in some markets that are pushing, stocks at such ludicrous prices that there's almost zero chance that the investor will ever make money. And you piss those investors off, and A, there'll be SEC suits, and B, it sends the negative energy. You look at some of the ICOs, we're seeing some, fly-by-night ICOs that, again, don't do the community, don't do the whole ecosystem any favors. And so I ask all of you to be your brother's keepers. Call people in check. Look at yourself and say, is this the right thing to do? Because at the spirit of this whole revolution is this sense of you can change the world. And it's really, really powerful. And so I asked myself, well, how can I participate? When I first went to Consensus, I thought, geez, I'll give Joe some money and maybe I'll be a partner there. And I started thinking, well, what are my skills? I'm a decent communicator, and I'm a decent leader, and I'm a decent speculator. And then I was like, well, Joe's a really good communicator, and he's a really good leader, and they don't really need a speculator. And so there was nothing for me to do there other than to be a cheerleader. And, as I've kind of dove into this space, I figured there is a role. And for me, it has been this bridge between the traditional institutional world and this kind of fun, exciting, and much younger and crazy world. And so, I've taken that relatively seriously. I've been trying to bring people over the edge and bring new participants into the space. I never thought I would actually take outside capital again, because being a fiduciary is it's a much higher standard of care than investing your own money, and quite frankly, it's a pain. But the environment was so exciting, I decided to hire the best and the brightest, and to get the energy around me, we were going to do it. And so we're launching a hedge fund, and we're building a full merchant bank, which goes from, helping people on their ICOs all the way to an institutional product. And really see ourselves as the kind of in between this crypto community and the more institutional community. Which gets me to the title of this speech, The Herd is Coming. A lot of people had asked me, why aren't more people seeing this? Like, it's so obvious. And I remember sitting at a investor dinner. On Wall Street, they have these dinners. You get all these big hedge fund managers around, and you talk about your best ideas. And one guy, he was a 60-year-old famous speculator, maybe one of the world's great investors ever, was pitching gold. And I said, you got to buy Bitcoin instead of gold. And they all were laughing at me. And I was thinking to myself, usually they respected me. I've been at these dinners a long time, and I kind of got booed off the floor. And it dawned on me that, 62, 63-year-old guys, and remember, the bulk of the money in America is owned by people over 60. The lion's share of wealth is owned by people over 60. They don't grow up staring into a phone, right? When I tell them that there are 400 million people that participate in an online market for digital swords and shields and helmets, they look at me like I'm out of their mind. Bill Ty was up on stage earlier talking about, there you go, Bill. I love the surfing there. Talking about a digital world, a fake world where there's a multi-$100 million economy already in it. And so I thought, if I gave my mother digital flowers for Mother's Day, I get a WTF. Like, what? Right? But I'm pretty certain that my daughter, or my granddaughter at least, when they get digital flowers, they're going to have the same reaction that, most of your girlfriends have when you give them flowers. Oh. Or if in the case of my wife, what did you do wrong? And so as we're shifting age, it's just so much easier for people to understand why this kind of idea of digital gold, digital good, digital store of wealth is going to take root. I would tell you that in the last 4 months, we have been inundated with calls from institutional people to come talk about the blockchain, Bitcoin, Ethereum, the ICO market. I was up doing a teach-in with some other guys to a $400 billion pension fund, and they came down with 12 people, very serious, they know a whole lot. And while they're probably 6 months to a year from investing pension fund money in the space, I know actually that the CEO left that and bought a whole bunch of Bitcoin himself. You know, Goldman Sachs has been public, and we've spoken to them about how they can trade. And so with 100% certainty, I would tell you that the herd is coming. And so, like, what does that mean for the community? It means a couple things. It first of all means that Bitcoin is going to outperform everything else. And I know this is a Ethereum company, and let me tell you, I have more ethers than Bitcoin, and because I love this space. But Bitcoin represents the kind of benchmark or bellwether that all this collective energy is showing up in. Because these are new buyers, and it's the easiest thing for them to buy. And so I would tell you that for the next 6 months, if you were purely short term, you know, Bitcoin's a pretty easy bet. It's going higher and much higher. There's going to be volatility. There's a fork coming in mid-November that, you know, maybe gives people a chance to buy in some chaos. But the institutional guys are coming. And it doesn't leave me pessimistic, the Ethereum space at all. Because it's a process of slowly learning the system, you know, learning and getting involved and getting engaged. But it's important that this space, because Ethereum is valued differently than the way Bitcoin is valued. Bitcoin now, at least in the institutional world, is seen as digital gold. And you can look at the market cap of gold, and you can look at this just as a store of value. And you don't care if it can do anything other than go up, just like any other, you know, money. Because what's money after all? Money is money because we say it's money, right? The British government recently changed what a British pound was. They took the old pound and they decommissioned it just last week. And now there's an octagon-shaped pound. And so they said that used to be money, it's no longer money, this is money. And so the collective community says Bitcoin is money, Bitcoin is digital gold, and therefore I think that's the first piece. Where Ethereum is valued a little differently. People see this as, at least I see this, but I think it's becoming more commonplace. Again, in the institutional world of the guys I talk to, as this public utility that all these really cool world-changing businesses are going to be built on top of. And so its value can only go so far ahead of where people's perception of how robust the ecosystem is going to be. And so the community needs some wins. The system needs to speed up. Some of these projects need to go from project to implementation. And so, you know, with patience, I think this thing is going to go a lot higher. I got 3 minutes left, and I promised myself I was going to end with some predictions and leave a couple minutes for questions. And so, you know, my prediction is this, that, you know, the community has in its own hands the ability to really change the world, to do the right thing, and the markets are going to go higher. It is, to me, safer to buy Bitcoin and Ethereum today than it was a year ago. The people that bought it at 100, it was kind of a yo bet. And you're buying it now with so much more built into the price, so much more infrastructure, so many more people involved, that I just really feel it's a far better bet today. And so, you know, I can't tell you how high things are going, but I think they're going higher. More and more talent is being sucked in. We've hired 8 people in the last 4 months, and we've got another 3 or 4 on the docket coming in. It wouldn't surprise me if we have 25 people you know, by February of the year. And so at that point, I'll stop, say thank you for being here. It's been an honor, and I'll take 2 minutes of questions. Or no questions.
I got a question for you. So as an investor, what's the biggest risk to the system that people aren't talking about? You can repeat the question.
Yeah, he's asked me what the biggest risk to the system is. You know, listen, regulators are coming. They just are. We're talking to them from the SEC to the CFTC. The U.S. regulators have been very, very good. You know, they don't want to kill the entrepreneurial spirit. They don't want to kill innovation. And so they're watching things. But we've got a very volatile administration, to say the least. And, you know, the biggest risk is President Trump or someone senior in the cabinet, you know, gets a call and changes the tone real fast. Those are setbacks, but I think, you know, the G20 still could put a real damper in the system if they wanted to. We don't detect any of that. The other risks are, you know, if there's a big fraud, all these little things dent away at the confidence people have, right? The ICO market is less robust today than it was 3 months ago. It's harder to get a deal done. And partly that's because the behavior around the ICO market wasn't great. And so people are leery of it. And so my original thought was, you know, you got to do good, make money and by doing good. Really this needs to be, because that's the way the system is structured. It's what's so genius about it. If everyone does their part and figures out what their role is, the whole system and the ecosystem grows. Yep.
Do you view Bitcoin and crypto in general as a hedge against the rest of the market?
That's a good question. He asked if we think of Bitcoin and crypto as a hedge. I think if there's a real crisis, Bitcoin will go up. There's some risk sometimes, though, that, you know, if people start having diversified portfolios, and so right now I don't think if there was a crisis, things would go down. But what often happens is when there's a crisis and you're losing money on your stock portfolio, you sell your good portfolio just because you want to take risk off the table. And so I think in the short run, it is a hedge. I think in 2 to 3 years, it will be much more correlated. And it'll be correlated because, you know, people look at their wealth holistically.
So I'm an investor in Pantera Capital, and so one of the calls that we were on recently talked about how a lot of hedge funds are popping up investing in blockchain and cryptocurrency. How would you evaluate these new funds coming up? Because obviously they're not all going to be qualified to be able to properly invest in these channels.
You know, it's the same way I think we'd look at a hedge fund in the non-crypto space. Does the CIO have a track record? You know, investing is not easy, and it's an arcane skill in some ways. And quite frankly, a good chunk of the top 15 coins is really macro investing. And macro investing is psychology and intuition, and it's a skill that very few people have. It's very different than the VC side, right? But the VC side has its own algorithm that goes through. I had the great privilege of spending some time with Peter Fenton, who was one of the benchmark partners. And after about 4 hours with the guy, we were skiing. I was like, that's why he's so good. Just the attention to detail on everything that guy had, just knew the space dead. And I was like, you know, my skill set is so much more intuitive. And so, you know, what we're building on our own firm, I'm trying to find people that have experience in VC, because I don't. My intuition helps some. And so I think you look at the portfolio manager first, the team around him second, and then is the structure they're giving you rational and fair? Are they making short-term or long-term investments with short-term capital, right? And so if they're going to invest in a liquid stuff, they better have long-term locked-up money. All right, I'm being told to wrap up. Guys, thank you so much. Enjoy San Francisco.